family? Trey High Power here, tapping in. If this is your first time coming to the Black House Management page, welcome, and I hope this video suits you well. We will be going over crude oil and the order flow concept on how I took this long today and we were able to capitalize around 3R. Okay, so let's go ahead and get down into the breakdown. First off, if you don't have Telegram, please download Telegram and join the group. Okay, the name of the group is Black House 500K. All right, and if you do have Twitter, or also known as X, please follow the company on Twitter or X, also known as Black House 500K. Okay, so today what I noticed, basically we have a nice textbook play in our Confluence profile 500K model. So this was an exhaustion print, rebound long. I noticed exhaustion from sellers, and they were not, even though they were doing as best they possibly can to purge and push lower, everything was being absorbed by the buyers. And then we had this big rally to the upside, and we were able to capitalize on that from basically a 1 to 5 minute sub-X bull swap. All right, so this was the entry. Okay, I entered right here at 59.51. Okay, you can see right here on the 1 minute time frame heat map. Okay, this was the actual order flow footprint chart on the 5 minute time frame. As you can see here, my entry was at 59.51. Okay, and then the market is pushing higher, and I'm going to go ahead and get down into the time and statistics and what I noticed in the order flow as to why I took this trade. The order flow was the only thing, well, not the only thing, but was the leading confluence as to why I decided to go long today. All right, this was the 15-minute time frame. As you can see, price running beautifully all the way to our target. We have huge buying stepping into the market. All right, coming into this triple stacked buying imbalance right here that we left. Now we're buying back up into that. Beautiful. Okay, and as you can see, price was just surfing the outer bands. All right, we broke that, and we purged to the top side of this internal range liquidity trend line here on the 1 minute time frame. And as you can see, I trailed my stop. Okay, and look at the CVD. The volume was definitely in our favor. Look at the CVD volume, beautiful. And my entry is right here, 59.51. Okay. All right, so let's go ahead and get down into it. So let's go to price action. So first things first, what I noticed, okay, what I noticed is that 6:30 a.m. Where is 6:30? So New York open. Okay, New York open, sellers became aggressive and price collapsed. Okay, this was basically a collapse hunt. We stopped out all of this, all these liquidity pools. Okay, all of this liquidity sitting underneath here, and we purged all of that. Sellers purged all of that liquidity that was built up right here. All right, so when we purged that, okay, we had buyers try to become aggressive, pushed all the way back up, just underneath major key level, $60 per barrel. Okay, this is something that we really need to pay attention to. Let's go ahead, and this is going to be MKO orange. All right, so this is going to be major key level, $60 per barrel. And for those of you who do not know, this platform that I'm charting on is Addis. Okay, I definitely recommend you guys go and buy you guys a license. It is an awesome trading platform that I use. And before I go any further, I do want to show you guys my cluster settings that I trade with here on crude oil. Now, it will be slightly different for gold because the way that the volume is printed, I just like to look at I just like to have a different view on GC, which is our primary asset, crude oil being our secondary. However, I will break down to you right now my cluster settings, then I'll get back down into the breakdown going into New York open. Okay, so if we go right here to the settings, we have our cluster settings. All right. And what I like to see is the bid and the ask. So the content for the cluster is going to be the bid and the ask centered. Okay. And then the mode that I have it on is the Delta profile. All right. And I also do have an additional footprint checked. So on the side, you can see exactly the added total of volume at every single level in that candlestick, okay, from the opening to the close. So those are my cluster settings that I have here on CL, which is our secondary asset here at Black House Management. Okay, and I am the head portfolio manager for this portfolio, and this is basically how I like to observe the order flow and how I'm able to speculate and create my narratives, whether they either be a long bias or short bias. Okay, so yes, these are my cluster settings. So make sure you can pause the video and you can screenshot this. All right. And these is everything else that I have. All right. So once again, you can pause it and just screenshot it and add this to your charts as well. Okay. So let's get back into it. Okay. So we have New York Open. Okay. We got very aggressive and we pushed price lower. All right. Sellers at the bottom of this candle showing major aggression after we broke underneath the value area low, trying to push lower. Okay, buyers absorbed all of that and then we pushed higher. As you can see, the max delta went from a 10 to a dark 300 to a dark 572. Why? Because that is showing you how aggressive at one point in time the buyers were inside of these 2 5-minute candles. All right. So on the ask on both of these candles, they were very strong. So on the ask right here, we printed, it was a print of 1100, and in this bar was a print of 1300. Okay, and at one point in time, the buyers were very aggressive and they were around 300, and that was aggressive they ever were in this bar. All right, when it came to the volume. All right, so we pushed back up into these selling imbalances. Okay, these selling double and triple stacked imbalances, and we pushed lower just underneath major key level, $60 per barrel. So buyers tried to reclaim higher pricing. Sellers came and pushed price right back down. Okay, we tried to, now this is, we need to pay attention to these order flow. Okay, so notice that when you see the light shade, okay, of the additional footprint, this is light volume, but when it gets really dark, you can see, look at these numbers, look at the difference in the numbers. So 23 on the bid, 55 on the ask, 78, 82. Right, I'm looking right here on the far right side of the footprint. This is going to be an additional footprint showing us how much volume was traded at every single level in total between the bid and the ask. Okay, 60 now. So 60, 41, 49. We got a little darker right here at 127. Okay, but that was negative. So a 91. So 91 sellers tried to push the market lower and 36 bought. Okay, aggressive selling. And as you can see, we have a red dot right here. Okay, so the market accepted higher pricing and buyers outbidded them, because if you look higher in the candle, we have 67 to 68, 135, 112, 113, 113. So as you can see, this was a big bull candle. Okay, but when we came up into this selling imbalances just underneath major key level, we pushed price lower. Okay, now look how aggressive in the bottom of the bar on the big trades indicator, how the sellers were really trying to get aggressive and pushing this market lower. Okay, we have 102 contracts on the bid looking to push price lower, only 30 on the ask, 51 on the bid. Okay, 151 on the bid. They're aggressively trying to push this market down. Okay, but it's not really met with any complementary order flow. Okay, the session delta was a very dark shade of red. Okay, because here at 6:30, all right, 625, the market, the session delta was only at negative 39. Okay, negative 39 in this candle. Okay, and then look at this big bear candle. Then the session delta goes to negative 705. All right, the selling volume, all right, heavily increased, and this market pushed a lot lower. Okay, it broke underneath $60 per barrel, and this candle ended at 59.80. Okay, so a 20 tick move, and then it goes to negative 1100. Okay, so we pushed even lower. Okay, and then we remain around the same volume, 1100. Okay, and then the delta goes to negative 606. So when we see a negative 1145 on the session delta, which is basically the CBD, all right, and then it goes to a negative 606, what does that mean? All right, that means that the selling pressure has reduced. Okay, buyers are starting to come in and sellers are losing a great portion of their strength. This is damn near cut in half. Let's just round this up to 1200. All right, there were 1200 sellers in this candle on the CVD. Let's just look at it like that, 1200 sellers. In the next candle there was only 600. So what does that mean? Half of the sellers had left. So if half of the sellers have left, what happens? The market tends to rise. Why? Because selling pressure is relieving itself. Exhaustion. They're tired of selling. This is the first sign that I started to notice. Okay, underneath the value area low. And also remember, okay, so yesterday we came into a POI. This is why I really started to look at this area very closely, because we came into a POI. So yesterday at 6:12 p.m., okay, November 9th, today is November 10th. All right, I did a 1 hour update. So I printed a screenshot of where price was currently, just slightly into maybe about 20-30 minutes. No, I apologize. This is a 1 hour time. So this is 3 hours into market open yesterday, okay? We're 3 hours into the open, and we pushed up until roughly around the 620, 630s above major key level, $60 per barrel, okay? Here on the Heiken Aishi candles, we have a clean level of support right here, okay? Sellers use this level, buyers use this level use this price level as support. We pushed higher, we pushed back down, we pushed back up, we broke through it, okay? We came up, we used it as a small level of support. We pushed up, we used it as a level of support again, as you can see. Why? Because there was no candle closure underneath this level of support. All right, so this is what I noticed, okay? And this is where price came into today. All right, so price entered this support and resistance key level right here. All right, this is where price came into today. All right, so if we do a bar replay, start new, okay, so price came into that sub-level of support and resistance, okay, and we pushed back up into the value area low. We broke back down, we use it as now we're using it as another level of support. We pushed back up again. As you can see here on the CVD, the volume is buying back up. All right, so this is where price entered today. So this was a predetermined POI that I was interested in, and now that price has hit this level, I'm looking at the order flow to determine who is going to develop the stronger hand in the auction. And once we determine who has the stronger hand, this is where our bias is going to be determined, and then obviously we're going to look to capitalize on that stronger hand, whether it be buyers or sellers. In this case, it was buyers. Even though sellers were trying desperately to purge lower, they were just unsuccessful. All right, so we push up just under 595, 5 ticks away from $60 per barrel. We push back lower underneath the value area low. Okay, so that level of support was at 59.58. okay, this was the level here. Okay, this was the level. Price came into that level, 59.58, which is our support level, and we pushed up, okay? And as you can see right here, we pushed up. We came into these selling imbalances just underneath $60 per barrel. All right. Here on the 5-minute time frame is a beautiful sub X level. Price came up to that 5-minute sub X level and we pushed lower. All right. We fell off of a cliff again. Now, what we need to pay attention to, all right, let's continue to pay attention to the volume. Okay. All right. So now here's another big trade. Okay. So price hit. So after we came up the first time, okay, then we pushed lower. All right. At 7:05, right here in this candle, sellers got very aggressive again. 237 contracts. A big seller came in, hit the, all right, looking to push the market lower, hitting the bid. All right. Sellers got very aggressive right here. 169 on the bid, 117, 148. Okay. But what do you notice? And even look at the delta. All right. Look at the delta. The delta is a negative 308. The session delta increased. Remember? So remember back here, it was 1100 and then we lost momentum, 600, 600. All right. And then we pushed lower. Now we're getting stronger again, 800, negative 900. Okay. And then we push right here and we get to a negative 1200. Okay. So there is a lot of selling. Buyers doing their best. I apologize. Sellers doing their best to push this market lower. Okay. But what do we notice? There's no complementary order flow. They're not being rewarded for all their efforts. Okay. So what do you notice? We push higher. It goes from negative 1200 to 1100 to 900. Why? Buyers are absorbing all of this selling pressure. Okay. So I want to break this down. If somebody keeps trying to sell something and the market is not accepting it, there's only two ways the market can go up or down unless it's going side to side and it's ranging. All right, but in this case, when you see this dark blue shading on the right side, that means there's a lot of volume, because look at the light volume. The light volume is a light blue shade, right? 45, 46, 69, 32, 44. Light volume. But when you start to see the dark blue, look at the numbers drastically increase. 201, 222, 301, 152, 291. All right, 344. The volume printed at 344. Why? Because there is a lot of strong buying and selling, but even bigger selling. They're trying to push this market lower. All right, no reward. We push higher. Okay, we push higher. We push back up into the value area low, 59.80s. Hit 59.90. All right. As you can see, look at the session delta. It went from negative 900 to negative 500 to negative 200. Okay. So when you see the session delta getting weaker, this is my indication that, okay, buyers are really doing their best at defending this level of support. Okay. Buyers are fighting very heavily, defending this level of support and stopping sellers from pushing this market lower. Buyers are defending this heavily. They're defending their positions. All right. What do you know? Then what happens? Let's push price forward. Okay. So we sweep this low. All right. We come down. Sellers got aggressive and swept out this low again. All right. So now we have a liquidity sweep. All right. Now we got a liquidity sweep. Let's keep pushing price forward. Let's go to the 1-minute time frame. Oh. Okay. So this is where the buyers tried to push price up the second time. Okay, and then we got that liquidity sweep on the 5-minute time frame, but right now we're on the 1-minute time frame. Okay, and this is what I started to notice. Okay, we have an internal range liquidity trend line that is building. Okay, we have an internal range liquidity trend line that is building. So where do you see that here? So that is going to be right here. We have this trend line that was building, okay? We pushed up, got smacked down. We pushed back up into the trend line, got smacked down, all right? And then we had another small retest right here. Okay, we pushed up, had a small reaction back down into the value area low, and then we broke that. Okay. Oh, I apologize. That wasn't even a big one. No, I'm wrong. I was way higher than I was supposed to be. That was another trend line. I didn't even see that one. I just seen that one just now. This is the trend line that I was looking at. Okay. So once we broke that, and then this was the entry right here. 59.51. Okay. So let's look at it. Okay. So we had this internal range liquidity trend line that was building, as you can see right here on the 1-minute time frame. Okay. So we were building this liquidity. Every time price hit this trend line, it came down. All right. So now let's look at the leading confluence that led me to enter this market long. Okay. So we push lower. Okay. Now we get a break of structure. False. All right. We get a false break of structure, and then we have this 1-minute level of supply. Okay. All right. Let's push price forward. Let me bring it over just a little bit so you can see. Okay. We came up into this 1-minute level of supply. All right. We broke that level of supply. Let me see. I had already entered. Yeah, I entered right here. Okay. Now, this is the thing. Let me tell you why I entered, right? Okay. So my entry was at 8:59. Right here. I entered right here on this candle. Long position, and I got in at 8:51. Then I gave myself 10 points, and I was aiming for 91. Okay, I was aiming for 4R. Okay, so let me show you right here in the order flow. Okay, so now remember, we're trading underneath the value area low. Okay, now sellers are doing their best to push this market lower. Okay, so as you can see, remember earlier we had that big seller. Where was it at? 237 contracts trying to push lower, unsuccessful. We pushed higher. Okay, we pushed back up into 59.91, which was going to be the high that I ended up targeting. All right, sellers got aggressive. We pushed price lower. We swept out that low. Now look at all this selling going on. Okay, 133 on the bid, 167 on the bid, 107 on the bid. Okay, but there's no complementary order flow. Look at the delta: negative 426, negative 943. Okay, negative 487. All right, very strong red prints of showing aggression from the sellers. But what do we notice? Okay, 59.51. Okay, there's really no complementary order flow. When I say complementary order flow, there's no reward for the sellers. This market is not going lower. Okay, the furthest that we pushed underneath 59.50 was 10 points. The lowest that this market went today was 59.40. All right, now in this candle at 8:35 is where I noticed all of this buying pressure come in. All right, I noticed all of this buying pressure coming in right here. All right, so as you can see, we have there was 200 on the bid, but look at this huge buyer. Look at this huge buyer that came into the market right here. This was the first major confluence. Okay, this is our entry. This market is getting ready to go long. Okay, this market was getting ready to go long. We have a huge buyer come into the market, 505 contracts looking to take this market higher. All right, 505 contracts looking to take this market higher. Okay, and then we pushed back up into the 1 minute level of supply. All right, now once we pushed back up into this level of supply, we came back down. All right, into, let me see right here, into basically this 1 minute level of demand, because this was the last candle before, this is the last bear candle before price took up to the upside. So we're going to call this a 1 minute level of demand. We came up into the level of supply, we pushed back down into that level of demand, and then we took up. Now once we broke this high, I bought, and I gave myself, I said, okay, once we hit 59.50, we came back down. Once we hit 59.50 again, retesting this trend line, I'm going to buy, and I'm going to give myself a 10-point stop. Okay, but look at what a big buyer came in at 505 contracts. This is the biggest offer that we've seen all day right here. Okay, 505 contracts looking to push this market higher, just underneath the value area low and that level of support, 59.58. Okay, so when we broke the trend line, I bought at 59.51. Okay, and look how the order flow continued to just rise in our favor. Okay, so the order flow is now, once we got this big buyer, okay, the delta jumped to a 346 from just a positive 19 to a dark shade of 346 in the negative. I apologize. In the max delta was 420. Look at the ask. It jumped from 570 buyers to 1,000 buyers, 1,000 contracts. All right. And then we take up to the upside. All right. Now, once we break above 59.51, well, I had already bought right here at 59.51. I gave myself a 10-point stop, and I was aiming for this high at, wait, hold on. No. I was aiming for this high right here, 59.91. I was aiming for this high right here. So remember, the market came down into the level of support. We pushed down, we pushed back up, rejected, we pushed lower, we accumulated, buyers developed again, we pushed up, sellers developed, we pushed down, and we broke that level. Okay, and now the order flow the order flow is now in our favor because the point of controls have switched. So the order flow has shifted. The order flow has shifted from bear flow to bull flow, and this was where buyers the buyer's distribution started right here. And this is what I noticed. This huge buyer came in. We broke above 59.50. I bought 59.51, gave myself a 10 tick stop, 10 ticks, and I was aiming for 40 ticks, 59.51, which was that 5-minute high. And look how the session delta immediately started growing stronger and stronger. 706, 748, 800, 1200. All right, as soon as we broke above the value area low, we got really aggressive in buying, all in our favor. Okay, all in our favor. This was the heat map. As you can see, this was my entry when we broke that internal range liquidity trend line to the upside. This is my stop, 59.41. Okay, as you can see, look how strong the ask is. Look how strong the delta is, the session delta and the max delta, all in our favor, rising above now the volume point of control. All right, this here was on the 15-minute time frame. Look at that big buyer right there, 582 contracts. The volume was 870, lifted this market higher. Okay, and that was the number one leading confluence as to why I entered the price. So basically, it was just an exhaustion print rebound long. So the market got exhausted after it fell off of a cliff short. Buyers developed underneath the value area low and that level of support. All right, once I noticed that big buyer enter the market, all right, I just waited for the confirmation of us sweeping and purging this internal range liquidity trend line, and I bought the breakout, gave myself a 10 tick stop, and I was just aiming for the 5-minute high, and that's exactly where price went, 59.90, which was 40 ticks 4R. All right, and as you can see, I trailed my stop to 59.76. Price came, hit my stop, and then it ran the TP. But still, I made around 2.5 to 3R. Beautiful trade. Look at the volume. Look at the CVD. The volume was definitely in our favor. So we were respecting this internal range liquidity trend line. We came up, we tested it one more time. We came back into the value area low. We kind of ranged for a little bit, and then we broke out, and I bought that breakout. Perfect time. So this lines up what I'm always saying. This is a small window of opportunity, calculated risk to reward. Okay, and it was spotted right here in the order flow, right here on the 15-minute time frame. As you can see, this huge buyer. All right, this huge buyer at 582 contracts lifted this offered higher. Okay, I bought immediately in the following candle. All right, in the 15-minute time frame, rolled this, and look at all these big buying coming in. Look how the session delta went from a 3. So look, on this candle, it was -40. The next candle, 315, 700, 1300, 1700, 1900, 2K. All right, I love order flow. I promise you I do, bro. Because it helps us to see the true intention behind buyers and sellers, and that was the leading confluence as to why we entered this market long. Obviously, the first one was because it hit our predetermined point of interest, that level of support that I spoke about earlier. Okay, it hit this level of where was it at? This is the GC right here. Price came in. This was yesterday. Today New York session. We fell off of a cliff, and we came and we tapped into this level of support, and then we bought back up right here on the 1-minute time frame. I apologize, on the 1-hour time frame. All right, so I'm gonna go ahead and end that video just like that, family. Once again, if this is your first time watching me, please like and subscribe. Please join the company, join the group on Telegram, Black House 500K. And I'm going to leave you guys with this. Remember, when it comes to financial risk management, our profession is managing the downside costs of printing high side returns of money consistently, done correctly, well, an abundance of fruit awaits us. Godspeed. 500K Trey, we out. Blessings.